Twitter, my DMs are blowing up with you guys panicking again. Well, honestly, I just want to say the fact that you can stress over investment in a peaceful country means you are already incredibly lucky, guys. But I know exactly what's happening. You're getting shaken out by headlines smokescreen again. Let's just take yesterday, for example. The world's largest gold ETF saw its biggest single-day outflow in 12 years. Some people are spinning this as a massive bearish signal. Combine that with Monday's crash sentiment, and a lot of retail thinks the gold run is dead. But have you noticed this kind of one-sided despair is exactly when the market is at its most dangerous and its most lucrative? My take on this outflow is just a classic profit taking, securing the bag. Gold had an insane run in 2025. A lot of institutions are facing audits and pressure to lock in gains early in 2026. So they use this pullback to take chips off the table. That doesn't mean the macro trend has reversed. It's just a high-level handoff of positioning. In fact, after last night's ADP payrolls came in bullish for gold, the DXY spiked and faded, and gold quietly started to catch a bit again last night, printing a strong base right around $5,100. If you look at the 1-hour chart, it curved off a beautiful W double bottom. And going forward, the underlying fuel for gold's next leg up is still geopolitical escalation. Trump promised to end the fighting in 4 weeks and claims he would secure routes to tank oil prices. But anyone with half a brain knows you can't stop a war just with a few tweets, right? Gold is holding $5,100 because smart money knows things could escalate at any second, and a safe haven bid is inevitable. Plus, more central banks are joining the gold buying cartel. Malaysia's central bank just bought 3 tons, their first net purchase in 80 years, and the Bank of Korea just resumed its gold investment too. With central banks acting as the ultimate backstop, the floor on gold is bulletproof. I know that the last couple of days have been brutal for spot holders. Long-term holding always comes with short-term drawdowns. But this might just be the darkest hour before the dawn, and a prime opportunity to scoop up cheap chips. The ultimate wildcard right now is this Friday, non-farm payrolls. Market expectations are completely torn right now. On one hand, you have rate cut hopes driven by a slowing economy, and on the other, geopolitical inflation might force the Fed to stay hawkish. So tomorrow, gold is going to be insanely volatile. Expect massive weeks in both directions. We need to know exactly where the big money is hiding their cards. Looking at the EBC order flow, I can see gold has entered a critical battleground. Downside support is at $5,100 to $5,070. This zone is stacked with institutional passive limit bids. And if Friday's NFP misses big, this zone will be the launch pad for the violent rally. As long as this holds, gold can reap higher at any moment. Upside resistance is at $5,230 to $5,280. This is a major historical supply zone and a key support and resistance flip level. If NFP can push gold to cleanly reclaim $5,280, then we can aggressively flip loan again. So if you are trading with leverage, keep your eyes glued to these 2 key levels. Finally, let me just say this. Stop panic selling. Like I mentioned in my last video, gold is going to stay in this short-term chop for a bit. And it's much harder for it to puke than it is to pump. Gold doesn't care about short-term headline smoke screens. As long as the dollar deficit of trust exits, inflation expectations remain, and the safe haven premium is still there, I believe gold can launch a counterattack at any second. Actually, look at it this afternoon, not financial advice.